Joining me with more on how China's economy is gearing up for the rest of the year is Yan Wang. He's Chief Emerging Markets and China Strategist at Alpine Macro in Montreal. Thank you for joining us.
Great to be back.
Now, let's start with a breakdown of China's first quarter data. What stood out to you most and why?
Well, actually, a couple of things. First, you also mentioned the economy has accelerated slightly from last year's level. So this is obviously good news, not just for China, but also for the rest of the world, because China is one of the most important growth engines for the global economy, number one. Number two is we see a pretty broad improvement across all sectors, from capital spending to industrial production, from retail sales to exports. It's a very fairly broad-based improvement, means that the policy reflation, the kind of stimulus measures that the Chinese government has been doing over the past couple of months have been pretty effective. And then lastly, we see in the domestic economy, we see a catch-up in the private sector. If you look at the breakdown of the data, private enterprises, smaller enterprises, they actually have outperformed the bigger state-owned enterprises. So this is what the Chinese government has been trying to achieve. So I think on that front, it's also a quite encouraging development.
And this really was a broad-based improvement, from consumer spending, factory activity, and investment all accelerating in March compared to the previous month. How sustainable do you think that is?
Well, I think at least in the near term, all the leading indicators are still quite encouraging. If you look at the confidence indicators have been improving, new orders have been improving, but also more importantly, we see signs that profits in the industrial sector have also been begun to improve. So on that front, this is more of obviously the acceleration is triggered by policy easing, but on the other hand, we see some sustaining momentum that is we can see that is being developed. So on that front, I believe the economy should continue to accelerate. But also, if you look at the Chinese policymakers, actually since late last year, have been having this coordinated policy easing campaign. We haven't really seen the full impact of that. Monetary policy has been eased, the fiscal policy, credit policy, on all fronts, policymakers have been easing. So I think the growth reacceleration will likely continue at least till the end of the year.
And we certainly did, before these numbers came out, heard a lot about concerns people had about China's economy slowing down, and then obviously the backdrop of the US-China trade war and how those talks are still continuing. How do you think that uncertainty played into China's broader economic picture?
Right. So obviously that will be a downside risk. So far, even in Q1 this year, Chinese exports have been doing fairly well. So that is one of the reasons why the economy has actually been able to improve. So if the trade tension begins to escalate again, if China and the US are not able to make a deal, if both countries are escalating their tariff war, so that will create, it potentially can create some uncertainty down the road. So I think that's one of the downside risks that we need to monitor. On the other hand, the US economy seems to be slowing down. So so I think that the external risk is something that we need to be monitoring.
And we also saw China's stock markets have been doing pretty well this year, up about 30% so far. What's driving that?
I think it's a combination of mean reversion and the expectation of improvement in the economy. Right. So, for example, the end of last year, the Chinese stock market was really depressed. If you look at valuation indicators, sentiment, all these signals were telling us the market was extremely depressed. So the part of the rally since the beginning of the year is actually part of the mean reversion from the undershoot territory. So that's number one. Number two is we know stock market is always forward-looking. So the stock market has been pricing in improvement in corporate earnings, improvement in stock multiples. So I think it's a combination of real improvement in the economy and also this kind of improvement in sentiment from a deeply pessimistic level.
And looking ahead, we've seen that international organizations and financial institutions have upgraded their forecast on China's economy. What do you think is making them so optimistic?
Well, because if you look at all the leading indicators, like PMI surveys, confidence indicators, So all these things have been saying that the economy has been bottoming out. So the signals are quite clear and quite consistent. So it's not surprising the financial institutions are beginning to turn more positive on Chinese economy. Stock markets, financial markets, not only just in China but also around the world, commodity prices, they have been also pricing in an improvement in the Chinese economy. So I think it's I think the outlook, the improving outlook is fairly certain in my opinion.
All right, Yan Wang there, Chief Emerging Markets and China Strategist at Alpine Macro.